In this video, we'll be looking at depreciation and the two types to calculate depreciation, which are the straight line and the reducing balance methods. Let's start with an example. Imagine we bought a delivery truck that cost us €80,000. Over time, as it gets used, its value will decrease. This decrease in value is what we call depreciation. We can't expect to sell the truck in 5 years' time and recoup the full €80,000 that we paid for it. Or imagine you owned a factory and bought a new robotic arm for production which cost €100,000. It's used every single day. Its value will go down due to depreciation. If you wanted to sell it in 5 to 10 years' time after buying it, you're not going to get your money back. One last example. Think if you bought a fancy new laptop for college for €2,000. You used it for 5 years throughout your time in college and no longer need it. In the eyes of a buyer, it's a 5-year-old laptop. It's second hand, it has a lot of wear and tear. Maybe the buttons on the keyboard are worn and the speakers don't work too well. It's not that appealing to a buyer. It loses value every single day, week, month and year you have it. Now that we've adjusted the depreciation and what it is, there are two methods that we use to calculate it. These are called the straight line method and the reducing balance method. Let's focus on the straight line first. This method allocates the same amount of depreciation every year over the asset's useful life, using a fixed percentage of its initial cost. This might sound very technical, but we'll break it down step by step. Let's say you bought a new games console for €600, and for example, games consoles are said to depreciate at 10% each year. So that means that the value of the game console goes down by 10% each year. Again, the straight line method uses a fixed percentage, in this case it's 10%, of its initial cost, which is €600. So we use these two figures to calculate our depreciation. Basically, what we're doing here is finding 10% of €600. You do this by taking €600, which is your initial cost, multiplying it by 10, which is our depreciation, and dividing it by €100, which leaves us with €60. This means our game console depreciates by €60 every single year. You might be asked in an exam to calculate depreciation over 3 years, for example, so we'll just show you how to do that using the straight line method. Again, a straight line uses the same amount of depreciation every year over the asset's useful life, which we worked out is €60. So year 1, the value at the start of the year is €600. It depreciates by €60, which means at the end of the year it's worth €540. On to year 2, our starting value is 540, which of course is the same as our balance at the end of the previous year. Again, our depreciation stays at €60, and this means that we're ending the year with €480 worth of an asset. Now, in year 3, same thing, our end of year balance for the previous year becomes our starting value for this year, which is €480. €60 depreciation leaves us with a balance at the end of the year of €420. And that's basically how you calculate depreciation using the straight line method. And to recap this, we know that the price of our games console, which was €600, we know that our depreciation rate is 10% each year. So we found 10% of 600, which is 60, so €60, which is what our games console depreciates at every year. We take this figure away from our starting value initially, and this leaves us with a balance at the end of the year of €540. We follow this method then each year, and you can see why it's called the straight line method, as it's €60 each year, it never changes. Every year the same amount of depreciation is deducted from the asset's value. What you can do here if you wanted, once you find your depreciation rate, is write €60 in each year at the beginning of the question, but it's up to you, whatever way works best for you. Moving on to the reducing balance method. This method depreciates the asset based on its current book value each year using a fixed percentage. What this means is that the depreciation amount you incur is reducing each year based on the value of the asset. Basically, instead of incurring a fixed depreciation rate like in the first example of €60 every single year no matter what, the reducing balance method means that you will have less of a depreciation as the years go on and the value of your asset decreases. We'll do another example here and now calculating the reducing balance method and use the same 10% depreciation figure. So again, our calculation brings us to €60 of a depreciation, which is our depreciation for year 1. Same as the last time, €600 at the start of the year. The depreciation at 10%, which leaves us with €60 and a balance of €540 at the end of the year one. We must do a little work when we get to this point. It wasn't as simple as the previous method, where we could use that figure of €60 every single year. The amount of depreciation now we incur will change every single year. It changes based on the balance at the end of the year. So our value at the end of year one was €540. So we use this figure to calculate our new depreciation amount. So we must find 10%, which is our depreciation value, of our new net book value, which is €540, which works out at €54, which is the new depreciation amount that we must take off our year two value. So we'll begin with adding in year two, the value at the start, which is €540, and we calculated what 10% is of 540, which is €54. So we take one away from the other, which leaves us with the balance at the end of the year two of €486 after depreciation. Next, we're going to use our end of year balance of €486 to find our new depreciation amount. To do this, we find 10% of €486, which works out at €48.60, which is the depreciation value that we take off our year three value. Add in year three, we're starting on the year with €486, which was our end of year balance for year two. We add in our depreciation amount of €48.60, which leaves us with a balance at the end of year three of €437.40. And that's how you calculate depreciation using the reducing balance method. To recap on that, the reducing balance method, we started by getting 10% of our initial value. The value of the games console was €600. We found 10% of this, which was 60, which left us with a balance at the end of year one of €540. That's straightforward. That's the same as the straight line method. Things get a little bit more tricky here. So we take our balance of €540, and then we find 10% of this, which gives us €54, which we subtracted from the €540 balance, and that left us with €486. Now we take our balance of €486 and we find 10% of this, which is €48.60, and subtract those figures, which left us with a balance at the end of year three of €437.40. To look over both, our straight line saw us get 10% of the initial value, which was €60, and spread this cost evenly across all the years, so it was €60 each year. It never changed. Whereas the reducing balance method, you can see that the depreciation amount changes every single year. It doesn't remain the same like the straight line did. As a result, the depreciation decreases over time as the value of the asset diminishes. So that's our two methods for calculating depreciation, and hopefully you found this video helpful.